Hi, Francis. Your team wrote a deep dive report called China Briefings: Structural Challenges Meet Technological Ambitions. Regarding technological ambitions, what are China's main goals?
Thanks, John, for having me today. Obviously, Beijing's main goal would be to develop its own artificial intelligence backbone amid an apparent widening of technological gap with the United States. And we do see tightening export restrictions on NVIDIA's AI accelerated chips. We likely hammer China's research efforts at one time when the leading generative AI components seek to build its own ecosystem and foundational models. Access to cutting-edge semiconductors technology may be restricted to the country, but the country could still maintain its global leadership in established technologies, including the mature node semiconductors and non-chip components like flat panels and printed circuit boards. And these are less geopolitically sensitive than semiconductors, we believe.
And Francis, aside from these new economy industries, there are still significant structural challenges facing its economy. What are these, and can China overcome them?
Yep. In fact, Bloomberg's economists see the 5% GDP growth target for 2024 as an ambitious one, given the debt-laden provincial governments, limited room for the PBOC to ease monetary policy further, and relatively fragile public sentiment to macroeconomical stimulus. Housing supply and demand indicators register steeper year-on-year declines in the first 4 months of 2024. When real estate has become a smaller factor of GDP, down from 23% in 2020 to 19% in 2023. Other growth factors are yet to emerge. For instance, we just take electric vehicles as an example. Its GDP share may only reach 3% in 2026. So China may still face a downshift of long-term growth trajectory.
And what are the milestones or catalysts investors should watch out for in 2024 and 2025?
We are glad to hear that the third plenum, a key policy meeting, has been scheduled in July, which has been delayed from the end of 2023. This is a key positive to the Chinese economy, and investors and the market could expect more market reform and policy changes, which could be coming out from this meeting. We also wait for Beijing's measures to lower housing inventory and boost home delivery, for instance, with reference to the completion of whitelist project financing. And finally, maybe the central bank may eventually resort to more easing in the second half of this year. Internationally, the biggest event will be the U.S. election to be held in November. We expect that to set the tone for China's geopolitical risk in the coming 4 years.
And who should read this deep dive report on China?
I believe the global investors should take a look at this report. In fact, the MSCI China Index has bounced about 13% from late April and up 26% cumulatively from its January low. High for longer Fed fund rates have pushed international investors to consider currency adjusted return prospects in some hotter markets such as India, Japan, and Taiwan. Chinese stocks, on the other hand, had experienced a prolonged plunge since February 2021. So, it has been trading at historically low valuations and started to gain attention from foreign investors. Many of them could have pulled out of the Hong Kong China market earlier, and now they may look at this market again. And this briefing can really give the latest fundamental view of the country.
Francis, thanks as always for your insights.
Thank you.
Your team wrote a deep dive report called China Briefings Structural Challenges Meet Technological Ambitions. Regarding technological ambitions, what are China's main goals? Aside from these newer Okay, should we go again? Okay. Hi, Francis. Your team wrote a deep dive report called China Briefings Structural Challenges Meet Technological Ambitions. Regarding technological ambitions, what are China's main goals? And Francis, aside from these new economy industries, there are still significant structural challenges facing its economy. What are these and can China overcome them? And what are the milestones or catalysts investors should watch out for in 2024 and 2025? And who should read this deep dive report on China? Francis, thanks as always for your insights.